Hello, good day to all the listeners out there. Welcome to the Daily Wrap. I'm Anton. Quick reminder, everything here is for education and entertainment, not financial advice. I'm not a licensed advisor. Do your own research or talk to a licensed professional before making any investment decisions. Tuesday gave us a split market, Dow up, Nasdaq down sharply. The reason was one company, Alphabet. We'll get into that, plus FedEx reporting after the bell tonight. Let's get into it. Starting with the scoreboard, and today's numbers tell an interesting story on their own. The S&P 500 fell 0.37% to 7,472. The Nasdaq had a rough day, dropping 1.32% to 26,166. But look at the other side. The Dow Jones actually rose 0.29% to 51,712. And the Russell 2000, which tracks smaller companies, climbed 0.83% to close above 3,000 for the first time. This kind of split doesn't happen by accident. When Nasdaq falls while the Dow rises, it usually means money is rotating out of tech and into more traditional sectors. And today there was a very specific reason for that. First story, and this is what drove the Nasdaq down today. Alphabet, Google's parent company, fell nearly 5% to close at $349.68. That's a big single-day move for a company of that size, and it dragged Amazon, Meta, and Microsoft lower with it. Three things hit Alphabet at once. First, two high-profile AI researchers announced they're leaving. Noam Shazir was a co-lead on Google's Gemini project and one of the original authors of the 2017 Attention is All You Need paper, the research that gave us the transformer architecture that underpins basically every large language model today. He's going to OpenAI. John Jumper, a Nobel Prize winner who led DeepMind's AlphaFold work, is going to Anthropic. These exits raise questions about whether Alphabet can keep pace in the AI race. Second, a California court denied Google a new trial in a case where a jury found YouTube was designed to be addictive to young users. That opens the door to damages and more lawsuits. Third, the investors are increasingly nervous about how much Alphabet is spending on AI, $100 to $190 billion in capex this year, while free cash flow is under pressure. When you spend that much, investors want to see the returns, and right now the timeline on that is uncertain. Second story, and this is the market structure lesson hiding inside today's numbers. When you see the Nasdaq down 1.32%, the Dow up 0.29% on the same day, that's what the rotation day looks like. Money moved out of mega cap tech, the Alphabets, Amazons, Metas, and into more traditional areas of the market. Industrials, consumer staples, smaller companies. The Russell 2000, which tracks about 2,000 US companies, actually closed above 3,000 for the first time today. That's notable because small caps had been larging large cap tech all year. Rotation days can feel unsettling when you're watching your tech positions fall, but they're actually a sign of a reasonably healthy market. When only one sector is going up, that's a fragile rally. When money cycles across sectors, there's broader participation. For everyday investors, this is a reminder of why holding a diversified portfolio matters. Not everything moved the same way today. Third story, and this one lands tonight after the market closes. FedEx reports its fiscal fourth quarter results, and this is a particularly meaningful report because it's the first one since the company spun off FedEx Freight into a separate public company on June 1st. What this means is tonight we get a clean look at what FedEx core parcel delivery business actually earns on its own. Analysts are expecting earnings of $5.91 per share on revenue of around $24.2 billion. FedEx has beaten estimates in each of the last 4 quarters, and Bernstein expects another beat of around 3% tonight. Beyond the numbers, what the market will be listening for is what management says about global shipping demand. FedEx is one of the best real-world indicators of how the global economy is actually moving. We'll have the results in tomorrow's daily wrap. Looking at the rest of the week tonight, FedEx results after the bell, which we just covered. Wednesday brings Micron earnings, one of the clearest windows into AI chip and memory demand, plus the Federal Reserve's annual bank stress test results. And then Thursday, the big one, May PCE inflation data alongside the final Q1 GDP reading. With the Fed already leaning hawkish, this print could move markets meaningfully. Mark your calendar for Thursday morning. That's the daily wrap for Monday. Alphabet led a tech sell-off that pushed the Nasdaq down over 1%, while the Dow and small caps held up. A classic rotation day. FedEx reports tonight, Micron and the Fed stress tests Wednesday, and that all-important PCE inflation print on Thursday. Bye now, have a good day.